Hi, my name is Dan Irish. I run an investment banking group called Irish Benedict. We do mergers and acquisitions advisory in the San Francisco Bay Area. We're licensed broker-dealers in California. We also perform fractional CFO services as well as other types of financing. We've also done valuation and restructuring as well. But I would say our biggest strength is in due diligence preparation and selling small companies to big ones. Our focus is really on the VC-funded entities where they've raised some venture capital, but probably not enough to displace the market leader, but enough to where the company's growing and showing some success, and it's a solid business. Our focus is closely on specialized software development, whether it be video games or B2B, blockchain technology. We have some clients that have done mobile games, and a few other clients that have just done B2B business solutions where they end up being acquired by an Oracle or a 3M or something like that. We have closed financings anywhere from, I think our slowest year was probably 15 million, and probably our most robust year last year was approaching 60 million. So we're really in that sweet spot where the deals are kind of too small for the big banks, but big enough to be really important to you and your business. The processes for specialized software development are fairly uniform, whether it's consumer product or a B2B product. And in working with Indinero, we've outlined the processes and essentially proven them amongst like 30 different of my clients so that they're really efficient in terms of making sure AP is paid, making sure AR is set up, royalty statements are prepared quarterly, reporting to financial partners is done essentially automatically. All the things that a small company would maybe struggle with or not have one person that has all the skills necessary to do every aspect of the finance manager role. Indinero really complements that. And so that's where we found a lot of value in the Indinero team, because they can complement our high-level strategy and advice with actual implementation and tactical execution in terms of what that strategy is. One of the questions I often get is how important is the financial preparedness to startups looking to exit or sell their business or even raise additional funds? And I would say, other than being in the right vertical at the right time, the financial preparedness is a key leg of the business foundation. No one can really sell a company without having solid financial reporting and being both GAAP and tax compliant. And one of the common pitfalls is that entrepreneurs, they're so focused on either growing their business or focusing on one deal, they forget to run their business. And maybe this ancillary part of the business is falling apart while they're focusing on one deal. And if that one deal doesn't close, they've kind of put all their eggs in one basket. And so where my firm comes in to help is actually running that process for the entrepreneur so they can continue running the business. And where Indinero really complements is in keeping track of the finances and reporting them to both myself and the business owner or the business shareholders in real time, so we can see the performance of the business as it continues on a growth trajectory, or arrest it if it's not on a growth trajectory, otherwise pivot or make it significant change. But, a lot of entrepreneurs will get started and then they'll think about this financial compliance component and put it on the back burner until they really need it. And then it's like a huge emergency in our fire drill to catch up on, 3 or 6 or 9 months where it's been neglected, all to get a deal done, whether it's additional financing or maybe even like a strategic products deal where the publisher or the strategic partner wants to do some diligence, but even if they're not investing money in the entity, but investing in the license agreement or an exclusivity agreement, you don't want to have to rush through a diligence process, make mistakes, and jeopardize a deal like that that's critical to the future of your company. So Indinero really provides the foundation that all the financial models are built on. So we'll take the actual financial performance over the last 24 to 48 months, put that into pro forma financials, show the actuals, and generate financial statements from that, of course, Indinero reviews. And then we'll build a financial model, essentially using some of those same metrics and some of the same growth, profit margins, whether net margin, gross margin, cost, the same cost of goods that Indinero can so accurately track, and also accurately track on maybe a per project or a per product basis. And then basically use that as our foundation for building new financial models that show what the growth of the business could look like if strategic talent was added, if additional money was added, or if the business expanded into a different vertical. Usually we get the referrals from the investors. So whether it's the VC firms or a strategic fund that has invested in particular entity, or is going to invest in a particular entity, and they know that the entity is going to need a CFO and accounting services, and they also know that at some point they're going to want to sell the business. So getting started with us early can basically make the exit process much more streamlined because we know where you're going, rather than just trying to engage a banker at the very end, give them all the diligence, have them spend 3 months coming up to speed on how the company is run and what the gross margins are and what the main KPIs are. M&A firms like mine benefit their clients by having Indinero prepare and maintain the financials that are GAAP compliant and diligence ready. Moving to close the deal as quickly as possible is always beneficial, both for the acquirer and for the acquiree. But at the end of the day, this means more of my time can be spent engaging in potential acquirers and less time preparing the diligence items or fixing mistakes from overworked entrepreneurs that didn't have the time or the energy or the expertise to invest in accrual-based accounting. Yeah, a lot of times because most LLCs are on cash basis because they're pass-through entities, so they'll pass their gains and their earnings and losses through to the partners of the LLC. And as an individual, you're on cash basis as well for tax compliance. But most corporations are on accrual accounting. And when you do the LLC to C Corp conversion, that's another thing you'll want to change, is moving from cash-based accounting to accrual-based accounting, which more accurately reflects the strength of the business based on when you're earning money, when you're paying for goods or paying for services, and then actually recognizing the revenue. And getting those financial metrics to line up correctly requires accrual accounting. And when you go to be acquired, you really want an apples to apples comparison because your acquirer is going to be on accrual-based accounting. So integration of the accounting systems upon acquisition is also very beneficial to have already made the switch to accrual-based accounting. And that's something that myself and Indinero can help with. The main value that Indinero has added both for me and my clients is the diligence preparation. And the reason why that adds a lot of value is because when you get into doing something as routine on a monthly basis, quarterly, it's much easier to catch errors and to have good processes established that may only take 15 minutes a month, 30 minutes a month, versus 10 hours at the end of the year trying to catch up on everything that was missed. And when you get into a deal, whether you're doing a financing or a change of control or your company's being acquired, time can often kill deals. And what you want to be is 100% ready, even before you sign the LOI to have your company acquired or to do the financing. You want to know that your diligence process will be smooth, efficient, and timely so that you can close the deal quickly and get on with running your business. And so that's where my firm helps clients a lot, is in managing that process. But when you work with me, I almost always insist that you sign up with Indinero because they can do like 90% of the work that's involved in getting your company ready for diligence, for an audit, or for an acquisition. So one of the challenges that I think Indinero shines most brightly is when a group of entrepreneurs get started, they usually form something simple and lightweight, like an LLC. And as the business grows and shows a promising trajectory, they may seek financing or seek to have the entity acquired. What is really beneficial in Indinero's process and has helped me tremendously is just doing all the accounting side of the LLC to C Corp conversion process. And that might sound like it's a complicated process, and it can be, especially if you have multiple partners and you're swapping into multiple different equity levels and or different classes of shares of stock. And in doing that process, you want to make sure that it's done right, because it comprises a legal component, accounting component, and of course a tax and compliance component. And in doing so, Indinero's experience, I think we've probably done 16 or 17 of these in the last 5 years. It's gone really smoothly because not only have the books and the accounting side been done and processed through essentially a diligence-ready aspect, but I know that all the items on the balance sheet are accurate and vetted and essentially have been looked at by 2 or 3 different people other than me. So that gives me a lot of confidence that when we go to convert that balance sheet to equity and to distribute classes of shares based on that equity, that those numbers are accurate. And that the flow through to the C Corp, where the new investment is going to come in, anyone who's looking at that entity and the structure can understand where that structure came from when looking at the LLC to C Corp conversion work papers. So those are all elements that Indinero really shines at, that just because we've done so many. And in doing so many with Indinero, it usually saves a lot on the legal because we have all the forms, we have the process, we have the worksheets, and we have the experience to do it. So really, it's just a matter of filing the forms and getting legal to review the documents prior to the filings. So in having Indinero as a partner throughout that process, it just makes it easier, smoother, cleaner, and less expensive. Essentially, all my clients are in specialized software development. There's processes for onboarding, there's process for month-end close, there's process for AP and AR, there's a process for equity awards, equity sales, and of all the systems that we work with, whether it be Carta, Gusto, ADP, Earth Class Mail, everything gets integrated into Indinero in a seamless way. So essentially nothing is going to get missed, because not only am I seeing it, but the team at Indinero is seeing it on the accounting side, and the team at Indinero is also seeing it on the tax side. So you're not going to miss something where you're trying to arrange a financing, but come to find out you have this outstanding tax bill that you didn't know about because you didn't do the filing in the jurisdiction that you were supposed to, and even though you had an employee and then that employee left. And sure enough, you have this outstanding tax bill that needs to be paid, and your financing is held up until that bill's paid. Taking all that data in from all the different elements, especially with companies that have a lot of remote workers now, there's going to be a lot of different compliance issues. Having Indinero watch those sorts of things on a monthly basis and a yearly basis is so helpful in terms of improving efficiency and catching errors early rather than catching them late when a deal is in progress. And as you know, time kills deals, right? So the sooner we can get a deal done, because we have all of our ducks in a row, the easier it is for the client, the better it is for me. One of the ways that Indinero has helped my firm with both impact and results it has allowed us to take on more clients and complete more deals. We've probably doubled our revenue when compared to the time prior to which we were insisting on clients use Indinero. And this is mostly because of the efficiency, the speed, and the accuracy of the financials. We've really grown from doing like 1 to 2 deals per year to now multiple deals per year, sometimes 1 to 2 per quarter. We've grown our book clients from 7 to 19. And that's some pretty serious growth, no matter what time frame we spread it over. What Indinero really does is it just allows us to scale because we're using the same processes and procedures that work for that type of business, whether it's software or technology related, but the processes are very scalable. So the advice I would give for other startups about financial management preparedness prior to exit or financing is prepare for the deal now. Don't wait And any mistakes that you've made, they're understandable, and we can fix them now before they slow a deal down or cancel a deal. Any mistakes are easier to fix the earlier they're discovered and replaced with processes that eliminate the chance of repeating the same mistakes. That's how you get better. That's how you get more efficient. And that's how you grow your business. In terms of looking at what startups, when they select an accounting firm and a tax partner like Indinero, look at what the firm offers. Look at their bandwidth. Like, how many resources do they have? Can you always get an answer within 24 hours, especially if you're putting together a critical deal memo? Can they scale with your business? And being in the cloud, that's a critical advantage. There's no emailing of spreadsheets back and forth. There's no version control issues, or just getting out of sync with the internal finance team and the accounting team. With Indinero, it can be all one team. You don't have to hire a full-time finance team to interface with accounting. They can take that function on themselves and probably do it just as efficiently because they do it for so many clients.